Kia ora, ngā mihi nui, kia koutou katoa. Welcome to another week of Lunch Money brought to you by Shareises. So at Shareises, our purpose is to create the most financially empowered generation.
Yeah, kia ora everyone. For those of you who are new to Lunch Money, we do this every Thursday at lunchtime. And this is a place where you as investors can hear from the people leading some of the companies available on the Shareises platform and also some other investing experts.
And Lunch Money is also available as a podcast on Spotify, Apple Podcasts and Google Podcasts. And please, if you are listening to the podcast, if you're able to take a moment to leave a rating and comment on Apple Podcasts, we'd really appreciate it. So my name's Alice. I am a financial analyst here at Shareises.
My name's Leighton and I'm one of the co-founders here at Shareises. And before we get into today's discussion, we just have a small legal disclaimer. So investing does involve risk. You're not guaranteed to make money and you might lose the money you started with. Any information we provide is general only and current at the time we are saying it. And if you're looking for help with your investment choices, we recommend talking to a licensed financial advice provider. We won't be providing any personalized advice as part of today's webinar.
Also, just as a quick reminder, if you do have any questions for our guest today, you can submit them through the Ask a Question button down below, but please don't leave any questions in the chat area as they're likely to be missed.
Thanks, Alice. Final little warning from me. So just please be kind and respectful towards our speakers and your fellow viewers. Otherwise, we do have to take steps to remove you from the webinar, and that's definitely not something we want to be doing.
Cool, thanks, Leighton. So today we are joined by John Berry, who is the co-founder and CEO of Pathfinder Asset Management. Now, Pathfinder is an ethical fund manager, and John's going to be discussing greenwashing and how to work out if companies really mean it when they talk about sustainability. So John will also answer any questions you might have about that and ethical investing in general. So welcome, John.
Kia ora, Alice and Leighton.
Kia ora, John. How are you?
I'm doing well, thanks. Yeah, doing good.
Yeah, it's really nice to have you here. Thank you for joining us from Auckland, and we're thinking of everyone up in Auckland, and including those listening in. That's for sure. We, those of us in Wellington, certainly appreciate those sacrifices. Thanks very much for joining us, John. It's been a little while since we've spoken on here. Anyway, I'm lucky enough to catch up with you a little bit more regularly than that, but because it's been a little while, it'd be great if you could start just by reminding us a bit about yourself and how you became a co-founder of Pathfinder.
Cool. Thank you, Leighton. So Pathfinder we founded about a decade ago, Paul Brownsy and I, and we launched our first ethical fund in 2010. And back then it was talking to people about climate change with our water fund. There wasn't a lot of interest. People thought we were slightly mad, but sort of fast forward to now, ethical investing is definitely mainstream. It's definitely on everyone's radar. And I think people understand the connection between how they invest and the impact on the real world in the same way we do as a consumer. We understand that. So, Pathfinder's been going 10 years. We just keep on pushing what it means to be ethical and engaging with companies and just trying to have an impact through the way we're investing.
Great, thanks. And just checking on your website beforehand, which is looking great, by the way. But I noticed that you've stolen two job titles in addition to co-founder. So on the website, you've got CEO and resident wayfinder. So I was just wondering if you could tell us a bit about those two roles and what you do within those.
So as CEO, leading the business, leading the team, strategy, direction. Wayfinder is resident wayfinder. My team gave me that name. I think it's the coolest job title I've ever had. But it's essentially, we have a compass or a direction or embedded in our DNA. We're constantly thinking about social and environmental issues and how we can positively impact the world. And I would just like to see me not as necessarily leading that, but as coordinating that within the team and encouraging that within the team. Resident wayfinder. I love it.
Yeah, that's cool. Wonder if I can get no one's given me a nice new job title yet, but that sounds pretty cool. Could you just give us a bit on what Pathfinder Asset Management does, and maybe starting with what a fund manager does and then moving it in specifically into Pathfinder and what you're working towards there?
Yeah, sure. So essentially with fund managers, what we're doing is aggregating money for investors. So, through Shareises, people can build their own portfolio, choose Tesla and different stocks, or you can choose a fund or an ETF. And when you choose a fund, we have a single strategy within that fund. When it comes to ethics, we have a single value set built into it. And so you're going to look at a portfolio and a fund and you go, oh, I'd rather not have that company in there out of the hundreds of companies, but we can only build one portfolio, and we build the best portfolio we can possibly build in line with our values. And so fund managers aggregate money and invest it into markets. So instead of investors buying a portfolio individually, we're doing that for them, and we're combining the money with other investors.
Mm-hmm. And what separates, or what's the key differentiators between Pathfinder from other asset managers?
The key differentiator, I think, is our focus on ethical investing. So a lot of fund managers, when you ask them around their investing for climate change, for example, they would say, yes, it's really important to take climate change into account because over the long term, companies that are not transitioning into a lower carbon world are higher risk, and so returns from them will be lower. So the focus is purely about making money. For us, that's really important. We talk about individual wealth and collective well-being. We talk about making money for the individual, but also collective well-being, which is we invest in with climate change in mind as well, because we think it's the right thing to do for the planet that we're leaving for the future. And I think that's probably our biggest difference, is we're really open about that fact that we're trying to invest for value and make money, but also invest for values and do what we see as the right thing.
Awesome. Thanks, John. And so obviously, speaking of ethical investing, and something I mentioned up front is that we're here today to chat about something called greenwashing. So I guess a natural place to start is, firstly, what is it?
What is greenwashing? But greenwashing doesn't just apply to financial services. It's basically any product in the market. So it could be your shampoo, your soap, or your house cleaning products. But it's essentially when a business claims to be eco-friendly or sustainable or low carbon, when they're claiming that their product has those characteristics, and in reality it's not. So in the case of investing in fund management and KiwiSaver, I would describe it as the marketing department has got ahead of the investment department. So the marketing department's making promises and the investment department's not actually doing them. It's absolutely wrong to mislead people with a product, financial product, or any product. It inherently seems worse when you're misleading people around claims that you're making the world a better place, or you're not causing harm in the world. There is something deeply wrong about greenwashing.
So how do you go about identifying if that's happening? What are some of the things you can look for? And also what are some of the things in place to try protect people from that?
Yeah, no, excellent question. How do we spot greenwashing? I'd sort of flip it on its head, and I'd say the opposite of greenwashing is authenticity. And so I would encourage people not to try and spot greenwashing, but to try and spot authenticity. And so what might be on your radar then? And let's use the example of fund managers. If you're looking at a fund manager, if they say, here's our ethical fund, but every other fund doesn't have those ethical characteristics, you've got to wonder if they really believe in what they're doing. You look at the underlying business itself, so it's not just about product, it's actually about the people and the business behind it. You look at Shareises, you look at Cooperative Bank, and also Pathfinder. These businesses are B Corps, and that gives people an indication that it's not just about product, it's about the way you treat your staff and community and interact with the environment. And also with fund managers, there's a lot of conversation in Europe on what's called competence washing. So an extension of greenwashing is fund managers who are financially trained are claiming to be experts in climate change science and environmental science. Like I am not a climate science expert. We actually have Kate in our team who is an environmental scientist, and her voice is as important as the investment guys when it comes to the investment team, when it comes to choosing stocks or not choosing stocks. Kate is not a financial person. She is an environmental scientist. And for us, that sort of authenticity of the voice, similarly in the social space, Anya Santanyand is one of our directors, and she is amazing. She is not a finance person. She runs Leadership New Zealand, which is a charity, and she brings those social perspectives, authentic social perspectives to our ethics committee. The other thing you could look at, for authenticity versus greenwashing is actually look at the underlying portfolio. If someone's claiming that they've got a great portfolio, a green portfolio, and then you see just big corporate names like your Facebooks and your ExxonMobils and and straight away they're not necessarily being authentic about it. So what you are looking for, particularly in the KiwiSaver space, what you are looking for is a KiwiSaver manager who's also investing in private companies as well as listed companies, because private companies can have a lot of impact, can bring in new technologies and sort of things. We've invested in, for example, Mentamere, which is John Kirwan's mental health business. We've invested in that with ACC to help take it global, but that has measurable impact on people's mental health. Women's Livelihood Bond, which is microfinance to almost 200,000 women and entrepreneurs in Southeast Asia, mainly in Cambodia. Great investment, but also great social outcome with the microfinance. We've done 3 social housing projects we've funded in New Zealand, and also a company called WoolAid, which has a really cool New Zealand company, has developed a biodegradable Band-Aid. So every Band-Aid in the world is plastic, right? They've come up with one made of merino wool, biodegradable. This could be a category killer. This could be huge. So we've invested in that business and want to help take that global. So again, it's don't necessarily look for greenwashing. Look for authenticity and look for something that you think is delivering what you're expecting and what's promised to you.
Yeah, nice. I feel like you left out a pretty big one there, John.
Well, actually, two big ones, Leighton. So we're all about investing for the democratization of finance. So if you invest in Pathfinder KiwiSaver, if you join us, you will be a shareholder in Shareises. We invested in Shareises some time ago, and also Easy Crypto. Again, about DeFi and democratizing finance for unbanked people around the world. We've invested in that. But yeah, absolutely right, Leighton. That was very remiss of me not to mention the Shareises investment.
No, but great to speak about B Corps. As I look at myself I can see myself on one of these screens here, and I'm sort of I don't know how deliberate it is, but I certainly find myself supporting a lot of B Corps. We're in Kathmandu here and Patagonia up here, and obviously well-known B Corps, but a really great way of looking to those types of things as well, I think, to avoid the where people are setting themselves up for audit, I suppose, a chance to be reviewed on what you say you're going to do. So I'm just really interested. You touched on it a little bit there, but how Pathfinder specifically how do you go out? How do you find these companies? What's your processes that you've got for that?
Yep. What's the process? Well, it's easy for me to say that the best way to choose a really good financial portfolio and ethical portfolio is hire a bunch of really talented, smart people to do it for you. We've got a really cool investment team at Pathfinder, and like I was saying, we focus on individual wealth and collective well-being. So it has to stack up, and it has to be at the intersection of what is going to make money and be really profitable for our investors, and what is good for planet and environment and people. The place we start is actually not just going out and picking the stocks. It's actually at a portfolio level. So we look at the global universe. For us, the global universe of companies is about 1,500 that we're particularly interested in, and then we'll apply exclusions to that. So you'll be familiar with tobacco, gambling, alcohol exclusions. We go a bit further with factory farming, animal testing, fossil fuels. That will take out close to 15% of our universe will be knocked out by exclusions. The thing about exclusions is they make you feel good about your investing. I don't want to be invested in animal testing. I don't want to be invested in fossil fuels, but it won't actually meaningfully change the world in a hurry. Just avoiding stuff, you've actually got to have a positive lens. So that's where we put our focus is, what do we want to overweight in the portfolio? So we'll think about the themes, which currently are things like water, renewable energy, and technologies that promote energy efficiency. So we'll be looking for those themes and how we build a portfolio. We're also, climate change is the biggest challenge probably for our planet and civilization. We're really mindful of, firstly, the carbon footprint of the company, and secondly, the transition plan it has to being a lower carbon footprint company. So, our KiwiSaver, for example, we've driven the carbon footprint about 65% lower than the market average, than the global market average. And you don't just go and choose the companies with the lowest carbon footprints. Otherwise, you probably just load your portfolio up with software companies. It's sort of on a relative basis. If you were investing in airline companies, we don't, but if you were, you could say, okay, I want to find the airline with the lowest carbon emissions per $1 million of revenue. So the best of breed in its sector. And you've also got to be mindful that some companies can have a high carbon footprint, but are turning into good companies because they have a really good transition plan. Or there's a company, Veolia in Europe, which actually buys coal boilers from other companies and over time it transitions them to alternative power sources. So it's buying someone else's someone else's problem, and that problem becomes Veolia's problem, and so it pushes up its carbon footprint, but it's actually then turning those to alternatives, lower carbon sources. So you got to be mindful of not just choosing the very best, but also the trajectory, I suppose, of a company. Another thing we're thinking of with portfolios is we want to maximize the environmental, social, and governance score, the ESG score of the portfolio. And this is about finding good companies. This is about finding quality companies. So we use a lot of research there. We've also got Kate on our team who does a lot of research independently of, how are they looking after their staff? How are they interacting with environment? Is their product useful in the world? What's the purpose of their product? Again, you can't just choose companies with the single highest environmental, social, and governance score. Otherwise, you probably just invest in Scandinavian countries. You look at the market you're looking at, you look relative to the market, you look relative to the industry. The next thing we think about, once we've got those parameters in place, is we add some financial parameters around how much volatility are we going to want in the portfolio, what sort of dividend yield are we going to want, do we want large companies or small companies, what mix between value and growth do we want, what industries, what geographies. And then we set all those parameters, and then we just go and find the companies that suit those parameters. And we can use optimization software, which helps us choose, and we can use our active approach of actually screening companies ourselves and placing them in there. But you're trying to build a portfolio with certain characteristics around carbon, around ESG, around momentum and volatility. And then you have to find the best portfolio that can build that within your ethical policy, and choosing companies that are going to make as much money as possible for our investors.
John, something I'm interested in knowing about, you mentioned before that you have a team behind you who can help you with all of this research and making those investment decisions. But what are the practical steps that an individual investor can take to make sure that they're investing ethically if that's what they want to do?
Yep, that's an excellent question, actually. So what you can do, if you're using a fund manager, I would look at their responsible or ethical investment policy, and I would go to Mindful Money, and you can put the fund in the mindfulmoney.nz, and it will tell you what harmful companies are in there. You can look for certification. The Responsible Investment Association certifies funds. You can look at the holdings and see if that aligns with your values. But ultimately, you need good research. And so if you're picking stocks individually, you've just got to do your research. And the really hard thing to do often is you've got to get news from sources that you don't agree with. So don't just read get information from the same sources that validate your own thinking. Always get information from sources that challenge your thinking and think differently, so you can make a better decision. And it's also really important to, if you've got friends or work colleagues that can bounce ideas off, and you always make better decisions as a group. So like with our investment team, we have portfolio managers who look after the individual funds, but decisions are made at a group level, and we can challenge, you've invested in this company, is the investment thesis still holding? And we can have a discussion around it. And the investment team is very, very active in challenging each other and discussing. You need other people you can bounce ideas off.
And some of those things you touched on just then about, different news sources or finding out like the holdings of the company or the fund, where can people go to find that information?
So for finding the holdings of a fund, there is a government website called Disclose, which does it. You could spend hours on that and still not figure out how to navigate the site. It's impossible. The best way to do it is just email the fund manager if it's not on their website. Like, for example, anyone who asks us for our holdings, we send our holdings to them. We're actually going to put it up very soon on our website. We will have all our funds on there. Managers should be very open about sharing that. So, if you want, that's probably the best way of finding what companies are in an individual fund.
Nice. With I guess one of the things about ethics is I don't know that ethics can change, but certainly for a company, I think they can. It's often tied into who's running it at the time, or there can be all sorts of different motivations. So, firstly, how do you sort of monitor whether the ethical position changes over time? And also, what do you think that people should be looking out for to try and track that?
Yeah, ethics do change over time. So if you go back 20 years, New Zealand was a very, very different place to what it is now. And things like we had a referendum on marijuana, and then social values are changing, and the way people approach life and values is changing. So we have to be mindful of changes in social values. We've also got to be mindful that a company that is good right now may do something bad in the future. And so one of our portfolios, for example, had Rio Tinto in it, and Rio blew up some Aboriginal sites that were tens of thousands of years old. Was absolutely disgraceful, unforgivable. We got that out of our portfolio within 48 hours. It took us 2 days, so just over 24 hours to get it out of the portfolio. So a company can seem okay, do something bad, you've got to act. You've got to move on that. So we actually have what we call a controversy rating. We're looking at on a daily basis the news feed for companies, litigation they're involved in, and these issues happen, and you need to get a company out if it transgresses what your values are. But the opposite's always also true. A company can go from being a bad company to being quite investable. And the example I give is Nike. Like in the 1990s, Nike almost collapsed as a company when it was found there was child labor in its supply chain. No one wanted to buy Nike products. No one wanted to invest in Nike. And they just completely re-engineered the way they did things, and they improved the measurement and the oversight of their supply chain to a point where they're investable now, and they're a leader in that space. So you've got to be dynamic. You can't just. It's the same with all investing. The company's financials change over time as well. Their behaviour changes over time. So you've just got to be aware and dynamic, monitoring them.
Great. And John, something I'm quite keen to loop back to is sort of earlier in our conversation, when you were talking about the different investments that Pathfinder has made, you mentioned Easy Crypto, and you recently took part in a capital raise or invested in the company. I'm quite keen to just touch on this because it is included in the Pathfinder KiwiSaver option. What is Easy Crypto? Easy
Crypto is New Zealand's largest crypto platform. So I think in New Zealand they have I think it's an 80% share. It's run by Janine Granger, who is amazing. She's an amazing founder, an amazing CEO. And the reason we were interested in Easy Crypto, I'm not so interested in crypto itself, still getting my head around that. And issues with environmental footprint of mining Bitcoin, for example. So there are issues around crypto. What I am interested in is the infrastructure around it, particularly the idea of DeFi and the ability for DeFi in the future to provide microloans, microfinance, micro deposits to people who don't have access to banking. And it's quite remarkable, but 8 billion odd people in the world, 1.7 billion people don't have access, or adults, 1.7 billion adults don't have access to a conventional banking system. And so there's this opportunity for a decentralized financial system to provide them business banking and personal banking, which opens up employment, it opens up a high standard of living and opportunity. That's what we're interested in. So Easy Crypto, New Zealand company, they raised $17 million, which was astonishing. They did fantastically with the capital raise. They are launching in Brazil and the Philippines. They're not launching in large developed Western countries. They're launching in countries that have a large unbanked population, and are going to be looking at offering finance and loan and deposit type products for those people. So it's exciting. It's exciting. It's it feels like the early days of the internet, or the first mobile phone coming out. There's there's opportunity there. You've got to try and work with the visionaries to see where this may go.
And I guess just with some of those ethical questions around cryptocurrency, which you sort of mentioned, how do you see this as being an appropriate choice for Pathfinder? I'm just keen to hear your thoughts on that.
It's a very fair question. It's a very fair question. If Easy Crypto was just focused on being a platform for trading cryptocurrency, that would have been a different story. It's their vision to be able to create finance for the unbanked in the world is, for us, is really, really interesting. So, and the tough thing with ethics and investing in companies is there is no perfect company. You always have to have compromises. You always have to weigh off, one ethical decision against another. And a couple of examples, Vestas, which is the largest wind turbine manufacturer in the world, it's from Denmark. We invest in it. There's been this massive problem with how do you dispose of wind turbines at the end of their life. In America, they've been burying thousands of them. However, for us, investing in the largest wind turbine manufacturer in the world is really important to decarbonize the economy. I'm an eternal optimist, and I believe technology will solve the problems. And Vestas have done that. They've just come up with a solution for repurposing the turbine blades so they don't need to be buried anymore, which is a great result. And Tesla's another example of, we've got to move to EVs. We've got to decarbonize the transport fleet. Tesla's been an amazing investment for us. But I also recognize the issues around that. And there are a number of issues, one of them being what do you do with batteries at the end of their life? I believe technology will solve that. And I have to have that belief to invest in Tesla and help drive a low carbon world, but at the same time recognize there are challenges with that. So there's no easy answers. I mean, crypto has challenges around mining of Bitcoin and the energy use. Although again, there are new cryptocurrencies that are coming online with different technology, different blockchain proof that uses way lower energy. So technology will solve it. And the anonymous nature of crypto is often a problem as well with, and who's using crypto if it's anonymous. I would say cash has the same problem. So, in my mind, if we're going to ban crypto on that basis, we should ban cash as well, because the whole purpose of paying cash is it's non-traceable. So yeah, look, accept there's lots of challenges, but for us as an ethical investor, it makes sense given its wider purpose.
Yeah, it shows the importance, or just the strength of the community around it as well, right? Like, what are we following here? We're following mass trends based on education, particularly into climate change and things. It's like that's the thing that will drive it home eventually. And you can't be a company right now without a strategy to lower your carbon footprint, and and you either won't get investors, or if you are lucky enough to get investors, then you probably won't be able to get a team. The flow on is real. So I think really trusting that is going to be really important. But thanks for sharing your view on that as well, John. Just a quick question on the crypto stuff before we move on from that. Easy Crypto's not public; that's still a private company, but there are similar companies and funds tied to that crypto infrastructure world. Just interested in any thoughts on what you think. People, particularly if they're trying to make ethical choices around it, some of the things they should be considering when they're looking at these companies.
Yeah, I suppose for us, one of the things we try and look at the purpose of a company. Mm-hmm. We're trying to look at, is its product useful, or I think, and this is not financial advice, but Galaxy out of North America is one such company. Number of the investment banks are looking at crypto infrastructure, and the thinking behind that is, in a gold rush, you don't want to be the person digging for the gold. You want to be the person who's selling the picks and shovels and tents and jeans in the gold rush, and that's the thinking around the infrastructure of the crypto as well. That's where a lot of the money is going to be made. Similarly, taking it wider, in semiconductor space. So there's a shortage of chips globally at the moment. And the companies that make them really energy intensive, but what we're interested in again is the infrastructure around that industry, which is the companies that make the plant and equipment and provide the plant to the companies that make it. So again, for us, the infrastructure and that plant costs billions and billions of dollars, but for us, that's where the most profitable opportunity is. What are you looking for in those companies? So for semiconductors, incredibly resource intensive, you're looking for a company that's trying to become more energy efficient and is aware of its carbon footprint, for example.
Yeah, nice. Thank you. We might, just conscious of time, move into some of the questions that we've got from some of the investors listening in. So the first one is from John. So the new climate reporting legislation in New Zealand will apply to most listed companies from financial years starting after December 22. Do you think there's a case for accelerating the implementation?
Yeah, look, yes, it would be great to accelerate implementation. The hardest thing around for us as a fund manager, one of the hardest things around investing and reducing the carbon footprint of the companies we invest in is data, is getting accurate data. And New Zealand companies are not yet at a stage where they're geared up for providing the data accurately. And it's a really tough, we spend a lot of time proving the integrity of the data we're using. We'd love things to move faster, but at the same time, they've got to move at a pace that's commercially sensible. Sorry.
Yeah, nice. Next one's from Rebecca. So how do you think the current climate change conference, is it pronounced COP26 or COP26? What's the COP26? Yeah. I thought it was that, but I felt like, let's confirm that first. But anyway, how do you think that'll impact on ethical investment worldwide? And do you see this as a turning point for ethical investment funds?
Yep. That's an excellent question, actually. I mean, COP is such a weird name, right? A conference of parties. I don't know where they got that from. But yes, I think people increasingly recognise we're at a critical time. We're in a critical decade, essentially. We've got to get it right this decade. David Attenborough gave a really good talk just a couple of days ago at COP26, which talks about the problems, but also talks of optimism about the opportunities. And I think that's what we've got to focus on. With investing, New Zealand is still a really big focus on let's avoid tobacco and let's avoid landmines. And that's not going to impact the world, and that's not going to get people passionate about making change in their own lives. What is going to get people passionate about making change is positivity. And so that's investing in better technologies and more efficient technologies. So with the question on COP26, just having the story of fear and that we're heading for disaster actually isn't necessarily helpful, because we need to know that information, but it also makes you feel less powerful or makes you feel like you can't make a difference. We need to understand the optimistic side to it as well. And ethical investing is part of that. And, I often talk about the 3 ways people can make a big difference in their life. The first is how they spend their time, like giving your time to charity or mentoring young people. The second one is how you spend your money, so you can make ethical choices with your spending. And the third one is how you invest your money. And I think people are increasingly making that connection with investing money and real world outcomes.
We've just got some analysis going on at the moment. We're interested in with the I know the COP26 has sort of been all over a lot of media and stuff lately, and we're just interested if that is changing the way people are behaving in their investment portfolios. So we're just looking at just the sheer quantum of information that's coming out now. I do most of my sort of I read about most things online as opposed to TV and stuff like that. But, most of the things I'm reading at the moment have this as a presence in one way or another, which is really cool. So it'll be interesting to see how that plays out.
Yeah, and actually just on that, Leighton, just really quickly, people shouldn't forget the power you have as an individual consumer as well. Like if you're invested with a fund manager and you don't like what they have in there and they've got oil stocks or coal stocks and you're not comfortable with it, tell them. And, with Mindful Money, which screens KiwiSaver funds and tells people what's in there, it's amazing how behavior has changed by fund managers when a light is shone on what they're doing. So I just encourage people, use your voice as a consumer or an investor.
Absolutely. Ultimately vote with your dollar, right? I mean, for people wanting to, John just touched on Mindful Money there, but we had Barry Coates on Lunch Money maybe about 4 or 5 weeks ago, Alice. That'd be about right?
Yeah, yep.
Yeah, so probably worth going back and listening into that one if you're interested, and check out that website too. This one's from Tammy. So there are so many different terms in the ethical investing space. So we use sustainable, ESG, green, integrated financial products, impact investing. So the list goes on. What should the typical investor be looking out for when looking to invest ethically, and what information sources should investors look to?
Okay. Look, that is so true. The terminology is vast and confusing. I don't use the term responsible investing. So responsible investing is the UNPRI, the UN Principles of Responsible Investment. That framework is really about making more money. So, I talked before about should you invest with climate change in mind, because those companies that don't care about climate change won't make good investments. And that's the sole lens of the UNPRI. Whereas that's important. Making money is important around the way you invest, and you invest in companies that look after their staff because the staff be more engaged and productive. But there's also the United Nations Sustainable Development Goals, and there's 17 goals for a better future. I wanted to link to those as well, which is why we use the word ethical, because ethical is clearly values driven. There's also sustainable and there's green, and it is really confusing for people. in a sense, the most important thing from a fund manager perspective, from our perspective, is just being transparent about what we do.
Yep.
And people should be able to look on the website and know what that fund management business believes and how they take account of, we talked about authenticity and greenwashing. Sometimes you've got to look through the marketing documents, but the most important thing is clarity around what a fund manager is doing. Mindful Money is one resource to do that. The Responsible Investment Association also has a search for fund type products based on ethics. It is really hard. There are more tools coming online, but it is really hard for investors. In Europe, they've created this fantastic, and I say fantastic with a smile because it's about 250 pages of rules, and that's not the way to answer, and that's not the Kiwi way. The way we should be answering is on a principles basis. We should be trying to agree as an industry and explain to consumers, here's the words, these what they mean, and the industry should be sticking to that. So one that's really tough is the word impact. So impact investment, an impact fund is different to your normal fund that just lists in listed equities, investment equities. So impact investing should be measurable, it should be intentional, it should be additional. So if I just go and invest in a good listed company, I don't know, Salesforce or whatever the company might be, I'm not actually changing that company. I'm investing in the shares and I'm backing it, but I'm not providing it new capital and I'm not actually changing the company. If I invest in a private company, which is what impact investing is, like for example, we invest in a few social housing projects, you can actually measure the impact on people's lives through that. So when you see the word impact investing, just make sure your alarm bell goes off to make sure it's an authentic use of the word.
Yeah. I'm sort of a little bit more optimistic on the secondary shares thing, I think, than you maybe, John, and the impact that you can have there, or certainly as a collective, as we further democratize businesses and get the chance to vote, and things as well, and influence the way companies are going. But I think we're still on a journey towards that, but all really great points. Hey, the next one's from Javi, and I'm really glad this person's asked that question because I'm super interested in your view myself. So given where interest rates are going, inflation, extended lockdown, what is your outlook for the New Zealand economy and New Zealand companies in 2022?
That is a really, really tough question. First thing I'd recognise is we're in a really difficult world, and we're in a world that's where things are new and are not economic reactions are not what we'd expect. If we look at since early last year, the way money has been printed, the way economies have been stimulated, unemployment has stayed unexpectedly low. The housing market has been unexpectedly strong. Interest rates will go up, is our view. Inflation is running high at the moment globally. We think it's transitory, but what our definition of transitory is not just weeks or months. It's probably to the back end of next year. The global economy, it's really tough at the moment because with the supply chain issues, and you've got a ton of bottlenecks in the system. Things are still functioning, but you've got to wonder how much longer it can continue to function and remain efficient without something giving, which is either interest rates being forced up or unemployment creeping up. But we're sort of broadly, how's the right way of putting it, is we're cautious, but we're still fully invested. We still, we still think markets have further to run.
It's interesting. I mean, I know, I think it was the Fed announcement last night, or at least I know there's no news on interest rate increases in the US yet. We've obviously done one already, and as far as I'm concerned, the banks have fully priced basically the next 2% into the home loan books. It looks to me, and maybe a little bit. Well, that's a different argument for a different time, perhaps, but a little bit earlier than what you might have expected. And I find this time particularly interesting. I personally have a strong view on what's going to happen, but I think there's like an absolute 50% chance that I'll be wrong about it. I just can't see New Zealand leading interest rates up. I remember last time it sort of tried to happen and it didn't really work out, but yet to be seen. Anyway, it'll be nice. It'll be the old 2020 hindsight thing. I think we'll all know once we know.
Yeah.
We'll get Sorry, just going back to the question. So this one is from Boston. So which ESG data provider do you use and why do you prefer them?
That is a really good question. At the moment, we are using ISS and Refinitiv, and we find one is really good on the quantitative side and one really good on the qualitative side. Essentially, for people who may not follow the question, it's essentially there are data providers that give you environmental, social, and governance metrics, that give you carbon scoring of companies, a whole bunch of really interesting non-financial information about companies. And some of it is objective and some of it is quite subjective in terms of the scoring of how they're treating their staff or their health and safety. You can put some metrics around it, but you also have to make qualitative judgments. And so that is a challenge. If you line them all up, they will have divergent answers between them. In the same way, if you went to 5 different brokers and asked for a valuation on a company, they would give you 5 different valuation prices on that company. So there's always some discretion and subjectivity in it. But yeah, the two we're using are ISS and Refinitiv.
Great. And last question before I hand back to Alice. So when will we see other Pathfinders funds in Shareises?
That's an awesome question. I actually just while you I was going to mention as well, there's a note there from Kathy saying she just switched to us, so it was great to have the conversation today. So thank you, Kathy.
Don't miss out on the quick marketing opportunity, John. That's for sure.
I couldn't help it. But yeah, I'd love to get more funds up there. We should chat later. The other thing, can I just mention one more thing just around ethical investing, which we haven't really touched on today, which was remiss of me, is just on engagement. And so one of the really, you're talking about large listed companies and can we have an impact on them? Where I see the big impact on large companies is actually engaging as a shareholder. And that can be as an individual shareholder, joining up with other shareholders. Like last year in voting, we voted 5,000 times with companies around the world. And a lot of them might be reappointing the auditor, which I don't care so much about, but there are some I care deeply about. And there were probably, of the 5,000, about 160 that we cared really deeply about. And we voted close to 60% of the time against what management of the company wanted on those votes and our environmental and social issues. And that is where shareholders can have a lot of, investors can have a lot of impact. And also, we talk to companies. We've been in touch with New Zealand's 20 largest companies around their net zero targets, around their target to reduce water use and waste to landfill. We've been in touch with one New Zealand company around its potential.
Internet's held up till now. Alice, have you lost John as well, or is it?
He's coming in and out. I think we may have lost John.
John, if you can hear, are you back potentially?
Okay?
Yep. You've just come back. We lost that very last little bit there, but I can't put a moment on. No, it was you were just sort of wrapping up the sort of advocacy, shareholder advocacy stuff. If you just want to round that out, I can't remember the last word that we got clearly. Sorry.
So the engagement is really important as individual shareholders. ExxonMobil, has gone down the pathway of fossil fuels are the future. A small hedge fund in the US got 3 directors on the board there who have renewables experience to change the trajectory of ExxonMobil. I mean, it's incredible, but that's shareholder activism, and we're going to be seeing a lot more of that shareholder engagement, sort of discussing things with companies, but also shareholders voting to affect change. It's exciting.
Nice. Thanks so much, John.
Great. Yeah, thank you, John. I feel like I could sit here all day and just hear insights from you. This is so great. But thank you to everyone who's tuned in today, and a very special thanks to you, John, for joining us. And we really appreciate your time and insights.
Absolutely.
Thank you, Alice.
Yeah, absolutely. And also, please, for everyone listening, check out our daily, and you actually as well, John, please check out our daily financial news podcast recap. It's around 10 minutes long and published at 5 p.m. Monday to Friday on Spotify, Apple Podcasts, and Google Podcasts.
And we will be back next Thursday for another episode of Lunch Money. So keep an eye out for confirmation of that session's guest on our social media pages. But everyone, please enjoy the rest of your week and stay safe.